All right, so what can we expect locally on the share market? Well, James Gerrish joining us from Shaw and Partners and Market Matters. James, very good morning to you. Midweek, we'd take a look at what went on overseas. Those volumes low, particularly in the States, I guess, because they're pretty much in holiday mode. They've got Thanksgiving on Thursday, half a day trading on Friday. So what are you looking for locally?
Yeah, good morning to you, Andrew. We're going to open up this morning. Obviously, SPI futures are up 62 points, but it was broad-based over in the US. And I know you made mention of light volumes, and that's right. But it's the reason why that this period of the year is generally a bullish one. So there's more of a lack of selling, and we certainly saw that overnight with 11 sectors on the S&P 500 rising. A couple of things I'd highlight: gold stocks were pretty strong overnight. Broader commodity stocks were strong overnight, and that's feeding into a positive SPI futures. The thing that underpinned that, of course, is a lower US dollar, which is key to that trade and a few others as well out there in the, Andrew.
Okay, so before we look at sector and stock specifically, what then is your view, James, as we head towards Christmas?
Yeah, if you just step back and look at some of the seasonality, I know everyone talks about the Christmas rally and the like, but there is some statistics backing that up. So if you go over the last 30 years of data, 22 times in December the market ends higher, and the average gain is 1.85%. So only 7 times the market has been down in that month, and the average decline there is about 1.65%. So there is some statistical significance to back that claim up. I do note though that we're up over 10% in October and November so far, so we're bullish coming into it. So in terms of our positioning, we've skewed portfolios on a bullish stance, and that's been doing well for us over the last couple of months. In the very short term, I wouldn't be surprised to see some consolidation after the market pushes up through that 72 level this morning. We're going to touch around that 72.40 level on the ASX this morning. So some consolidation above the breakout level wouldn't surprise me. Before then, we push higher into Christmas. So we're maintaining a bullish stance, Andrew, although less so than we did when the market was trading in that mid 6,000 level only a couple of months ago.
But James, do you buy in now and potentially take some short-term profits with the prospect that we're likely to see perhaps the market come off early next year as economic growth slows and we're seeing that hit earnings?
Yeah, I think you've got to be focusing your portfolio on at the end of the day the stocks that you own and the broader sectors you want to be in. So in terms of what we're doing, we're looking to trim some areas of our portfolio. So we've got Oz Minerals, for instance. So it's trading 3% below the bid price. It's that's going to take a fair while to play out. Perhaps it's not going to play out until Q2 23. We're using those funds to allocate elsewhere. I think there's opportunities in the gold space. Gold's been absolutely unloved over the past 12 months, but weakening US dollar is putting some support under the gold price. So Evolution is one we're looking at buying. So there's always you can always tweak your portfolio. You start from I want to be be positioned for a run into Christmas. These are the sectors I want to skew my portfolios towards, and then it's about optimizing the positions within your portfolio. So there's always things to do in terms of active management and optimizing performance. It's not simply buying, setting, and forgetting.
So James, let's be a little more specific then. So what your overweight resources then? And if so you mentioned gold, for instance, you're liking Evolution. Any other ones in that space at the moment?
Yeah, I'd probably call out 2 areas that we're overweighting. As resources would be number 1, and technology would be number 2. So that trade is only partially working at the moment. So the resources have been reasonable, but the technology stocks have been stubborn. So that can play out in terms of resources. This week we've bought. Yesterday we bought New Hope Coal. Last week we bought Whitehaven Coal. So that pullback in the coal space is created some good risk reward entry back into a pretty hot sector that's corrected sort of 35% from its highs. So we think that represents a reasonable trade into the back end of the year. Evolution and the broader gold space. So we've got Newcrest in our portfolios in the large cap space, but we're looking to add Evolution into the portfolio. We think that'll do well into Christmas on continued weakness in the US dollar. So, I made mention of the copper space, so trimming out of Oz Minerals, given it's only 3% below the bid price. Sandfire raised capital at the back end of last week. You can see from the performance post capital raise how much demand there is for that stock. So we think that's a good play. We have a reasonably large overweight in Sandfire in our portfolios already, but we plan to take up our additional shares in that rights issue. So there's always things to do, Andrew.
What's your view of the bigger players, particularly in iron ore, BHP, Rio, Fortescue?
Yeah, well, obviously iron ore's had a very good run, and that's seen Fortescue sort of 30% up from its lows in about 3 weeks. So would I go out there and buy Fortescue now after its run? No, I'd be a buyer of weakness back under $18 in terms of Fortescue. We don't own it, but we would be interested back under 18. Bearing in mind that we're not as optimistic on the iron ore price, the underlying iron ore price, over the next 12 to 18 months, we think that probably tracks sideways at best, potentially down at worst. So we're a trader of iron ore stocks as opposed to being a longer term investor of iron ore stocks. BHP we own, but we'd be a seller back up in the high 40s. It's 44 this morning. So I think you've got to be playing that. You've got to be a little bit active in your resource exposure.
Yep.
Is what I'm saying.
James, just very quickly, you mentioned tech stocks. It's saying they're stubborn. Are you in there now, or are you waiting to get in? And if so, which ones?
No, we're in there now primarily. We've got a big overweight in that space, so we're reticent to add more. But the one that's hurt us most probably in recent times has been Zero. It's been very weak. Aristocrat, which we're about break even on, that's had a weaker than expected, or delivered weaker than expected guidance. Some of the platform companies have been good. So Hub24 has been a really strong holding, and that continues to kick goals. And we like Altium, been there for a long time, up fairly substantially on the position, but we think there's more to go on the upside. So it's been a bit of a mixed bag in the tech space, Andrew. Overall, we've got a pretty decent allocation in it at the moment. Looking for that, those bond yields to peak in the US, and that to underpin a sustained rally in technology stocks.